I'm Nigel Lamb, Chief Executive at Sussex Innovation, and welcome to our final episode, Money, Money, Money. Finance is one of the most important parts of the puzzle. How do you fund your innovation so that you can make it happen and bring it to life? Today, we hear from finance and funding experts as well as real-life stories from entrepreneurs about their investment journey. We dig deeper into which funding models suit different types of innovation and how to go about seeking the funding you need. But for now, and for the last time, here's Paul Nightingale, Professor of Strategy from the University of Sussex Business School, to outline the main funding models commonly used to finance innovation.
Over the course of this series, you've learned how to identify and develop opportunities, how to manage your team to give innovative ideas the best chance of success, and how to capture the value of those innovations. But in this final episode, we're going to talk about one of the biggest challenges of all. For most small firms, finding the money to make this all happen is still a significant barrier. There are several different approaches to raising finance, and each brings its own unique resources, incentives and risks. The easiest way to think about each approach is as a kind of promise. Whichever financial instrument you use, your business model must deliver on that promise. Let's take them one at a time. A grant is the promise to deliver a proposed outcome. The funding body transfers resources and takes on the risk on the understanding that the project will deliver a specific benefit they're looking for. While this might appear the most attractive option for a small business, you will often need to prove your ability to deliver against the brief and structure the project in a way that satisfies the funder. Debt, on the other hand, is the promise to repay a loan later with interest. As such, your creditor transfers resources but doesn't take on risk. No matter how well or how badly you do, you'll need to pay it back. Debt can be costly both in terms of repayments and bureaucracy, and the structure of UK banks means that innovation is riskier than many of them will tolerate. However, if you can secure debt finance, it's a stable and structured option that makes financial planning quite straightforward. Finally, equity is the promise of a share of future profits. Your investor transfers resources and buys a share of the firm. Because of that, they may end up making more money if the venture is a success. However, equity involves losing some control over the business, and your stake may become diluted further if you need multiple rounds of investment. However, investors often provide additional benefits to the business, such as introductions or expertise. Whichever approach you follow, you must satisfy yourself that you're willing to accept its risk profile in exchange for the unique resources and incentives it can offer. We're now going to hear from our panel of businesses about their funding journey and the lessons they've learned along the way.
So top tips I would definitely tell to anyone raising investment is get your SEIS and EIS advanced assurance through the government. Those allow tax breaks for incoming investors. For SEIS, an investor gets 50% tax break on any investment pledged, and with EIS they get 30%. So let's say somebody gives you £100,000, they'll be able to claim back £50,000 on SEIS on their next tax return. So investment's so important, especially in our tech industry, because the expense that I underestimated. For example, I thought websites were, £5,000 per pop, and I thought app design would be the same. But when you're building something from scratch, you're into the hundreds of thousands. So don't underestimate how much money you need just to build the product. And then you've got to have money then to market it going forward. So yeah, always do your research on how much money you're going to need. And that goes down to good financial planning into your 3-year plan. So the way we found our first investor was, by chance through one of the founders. But the following rounds, we sought out individual venture capitalists and angels. So the one thing you might get into the habit of doing is literally just scattergunning your approach and sending out your pitch deck to hundreds of angel investors or VCs, which you can find on LinkedIn. Trouble is, you'll get a lot of we're in health tech, or we only focus on these type of products. So really research who you want to get involved with, and specifically tailor your pitch deck to them, because one pitch deck won't fit all. You've really got to nail down who you want to work with, because it's a long partnership with these people. And having someone that understands you is half the battle. There's nothing worse than sending a pitch deck to a quite agnostic venture capital fund, but you have to really convince them what you're trying to solve. So when you find the people that are in your industry, they understand exactly what you're trying to do, and that's the battle. And once you've got past that, the rest of it's quite an easy sell.
So one of the biggest highs and lows in startup, I'd say, is financial control and money, and it's really heartbreaking when you start to run out of money, isn't it?
It is. So I'm always on the lookout for more funding and sort of trying to make sure the project can carry on. Recently, we did a pitch deck that didn't resonate with the angels we were pitching to. We were amongst a group of 4 other companies, and they just said, don't really know what you're doing, don't quite understand what the thing is. But what we did do was we actually used our product and sent one of the angels a gift. That penny dropped when he felt the experience and went through what we've actually built, which isn't just sending a gift, it's sending an emotion. That's when he really got it and understood, and that carried us through to the progressive rounds now with them. So we've gone from really low point feedback to, okay, let's meet up, which is great.
Welcome everyone, my businesses who've successfully raised funding for innovation. Could you introduce yourselves?
Hi, my name's Omid. I'm the CEO and co-founder of a company called Present, which is a social gifting app.
Hi, I'm Nima Amin. I'm the head of ventures at Sussex Ventures, and I help early stage businesses get investor ready.
Hi, I'm Akshay. I'm the CEO and co-founder of Percept Imagery, and we are helping e-commerce brands convert more and reduce their returns.
I'm David Parr, CMO at Present alongside Omid.
Fantastic, lovely to meet you, David. Akshay, what about you? Can you tell me about your business?
So we built a platform called Spree that lets anyone shopping online virtually try on whatever they're shopping. So for example, if you're shopping eyewear, you can instantly try that sunglass or that glass from your favorite website using our platform. If you want to try out makeup, if you're buying makeup, you can try that instantly without the need to download an app. And our solution works in store and online.
So essentially, the innovations that you are creating are about doing things digitally that have traditionally been done in person.
Definitely.
Yeah. Okay. Well, that's a really interesting place for innovation. I'm interested how you did the due diligence part, because I imagine, and I guess this is a question to anyone, that's going to be quite a key point when you're trying to get investment. Someone's going to ask you those questions.
100%.
Well, no matter what idea you have, you think, okay, I'm going to love it, my mum loves it, but you've actually got to do the market research. Is there a consumer fit? Is there any money in it? What's the size of the market? The addressable problem that you're trying to solve? So that was the next action that we took. I'm really good at the ideas. Dave's great ideas, but where he really comes into is bringing my ideas down to a level. Yeah, you sat down and analysed and really delved into the market to find out, is this a problem that actually exists, and is our solution what people need?
Going to answer that problem.
Exactly.
Yeah.
So that's what we did, and then the next stages in this process, which every sort of founder will go through, is creating a pitch deck and a business plan to then put in front of people to say, okay, these are the guys that can do it. Because what we find is it's usually the people they invest in and not actually the business or the solution. So we just put all our efforts into convincing people that we are the guys to solve the crisis of gifting.
We had our first angel literally walk in as an ad hoc meet and greet for a kind of another founder in the company, who at the end of that meeting said, I'll invest.
So to anyone who's not familiar with the term angel,
Right. Yeah.
Could you just break that down? In a religious moment.
Yeah, it was a high net worth guy who was CEO of a couple of other high profile companies. He was a mutual friend of one of the early stage founders.
Right.
And he just came in because he liked the idea of what we were doing, but more just wanted to say hello because he was in town.
Right.
So it was very casual, but what turned into a casual hello, how's it going? He grilled us so hard.
Right.
So I was actually halfway through this ad hoc meet and greet, I was just like, today is just the worst day ever. We've had this terrible call saying we've got to stop our whole business plan.
And they've been interrogated.
And then I've been interrogated on all of the parts of the business which I wasn't very comfortable to answer, actually, which gave me a steer on how good he was, or business acumen, what level of business he was at.
Because he really knew, was asking all the right questions.
All the hardest questions to answer, actually.
Yeah.
So I felt properly on the spot.
It's like Dragon's Den.
I was squirming away, trying to answer all these. It's quite early stage in the whole business. But then for him to stand up and said, I'm in.
So surely going through that experience meant that you were not only more aware then of the kind of questions that investors can ask, but also confident that when you do answer those questions, that they will invest in you.
Yeah, exactly that. I think the detail of his questions was unnerving, but I think what he unearthed from us was that even the parts of the business that we weren't totally clear on, we at least knew that they were problem areas.
Right.
And I think that's what he wanted from us. He didn't expect us to have all the answers, but he wanted us to know where our unknown unknowns are.
Yeah.
Known unknowns and unknown unknowns. As long as you know what you don't know, that's fine.
Yeah, we don't know what you don't know.
And if you really don't know, he'll give you the money, it turns out.
Okay, so what about your investment story? Can you tell us a bit about that?
It took us about 6 months end to end, right from the moment we realized like we need further funding to scale up the platform. And even to reach at that stage, we had a pivot from a previous platform, which we realized there's a bigger market in e-commerce for our technology.
Right.
And then we had to quickly pivot the platform. And we had like all sorts of...
So to change your entire platform, repivot, is that not a language for change the entire platform?
Yeah, probably. So we were into architectural visualization, where with a VR headset, you can like visualize and, tour around a property that's not built and then have immersive meetings now.
Yeah, wow.
So this was like pre-COVID.
So we could be having this whole meeting virtually.
Yeah. So we built the whole platform and then we realized like the market isn't ready yet because everyone needs to have a VR headset.
Right.
So people can't access it. So all our meetings with our early clients, they were like, we love this. But it took a long time when they went back and thought about it. How are they actually going to fit this into their workflow? So it was kind of too disruptive for its own good.
Right.
And then we kind of, figured that, okay, accessibility is a problem. So we need to solve that. And then we figured like e-commerce is a big opportunity here, where we've already built the platform and we'll pivot to e-commerce where it's already integrated with the website, so there's no app downloads and easy for everyone to use. And it's going to be a game-changing e-commerce experience. So if you look at e-commerce in the last 20 years, the fundamental way how you buy products hasn't changed. Like you go on a website, you look at a photo.
Yeah.
Based on that, you make a purchase decision. So we're kind of changing that where you are trying that product on you, real time.
It makes total sense sitting here talking to you about it, but I can imagine that might sound a bit complicated to certain investors. So how did you simplify that message? How did you communicate with them and get them engaged?
That's such a valid point because at that time, we didn't have any case studies. We had like some really, really early clients, but nowhere near what we wanted to build and what was in the pipeline.
Yeah.
And it's really difficult to explain people like how you're going to virtually try on something directly off a website.
Yeah.
So we kept getting questions from investors like, do you need a special kind of an app or do you need a special kind of a VR headset? How is it going to work? So that was quite a challenge. So we had to build a separate prototype just for the investors.
Right, just so they could understand it clearer.
They could understand
Was that
it
really expensive though?
Not expensive, but it just because we come from that background.
Right.
It was just
Oh, so
time.
nothing for you, just knocked it up in the back.
Yeah, but like
here's one we made earlier.
Here we're doing like 6 months worth of work in like 3 weeks.
Right.
So
it's fast.
Yeah, really fast. And you also learn like you have to make the language really simple.
So, Nima, can you talk us through we've heard about angel investors, which isn't somebody swooping in with wings, but I imagine it can feel like it if they're the right kind of investor. Can you give us some of the other terminology that might be unfamiliar to people?
Yeah, of course. So the other options at early stage are family offices, which is made up of, again, high net worth individuals.
Okay. So families with lots of money that they like to invest in things?
They will have a front investor who invest on behalf of that family office.
Got it. Somebody who manages their money and looks for investment.
Absolutely.
Got it.
Private equity firms, and then we come on to venture capitalists, which is, I guess, that first Series A that everyone is working towards.
Yeah. What is a venture capitalist?
So again, they manage money on behalf of other individuals or corporations and look for the right type of investment that's going to create a greater return for that fund.
So they're looking for projects to capitalise on and make capital from. Perfect, got it. Okay, so I guess as far as you guys are concerned, how did you know when was the right time to do what as far as your relationships with your investors?
It's difficult.
Did you have any training or?
No, we've been through the process before, and I think it's just when you start this journey, it's a natural drive, and not sure if it can be taught so much, and I think you probably experienced it.
I mean, for me, so I've been part of a few accelerators. So again, it's like academics. You have guidelines, but from my experience, it's good to have guidelines going into something, but it all comes with experience. So I probably, in our last fundraise, I've probably spoken with more than 100 investors, like collectively in group pitches. There was one day, there was some event, and I was pitching straight for 4 hours to about...
Oh my God, it must get exhausting.
15 investors and like 20 minutes time slots. And by the 4th one, I was like tired of hearing myself, repeating the same stuff. But
we had that. We had a whole week of the same.
But when it went to the Q&A, when it went to the Q&A, every investor had a different question, and you have to improvise.
Right.
So that, like, it was a really exhausting day, but it made me get a lot of perspectives really quickly. And also, again, the more investors you speak with, the more you get an understanding of what works.
So you get used to the process. Right.
Each investor is different.
Yeah.
And you often go into these meetings thinking they know everything that's in my mind, but you just got to treat them just from a blank canvas.
Individually.
Yeah, start off at the easiest. Like we say to people, we're a gifting app. It just allows you to send somebody a gift and they have no idea what that means.
Yeah, but it creates questions.
Great. And then you sort of figure out, after a week of speaking to 100 people, you start thinking, right, I need to speak to this type of person or this type of investor that understands the industry we're in, because that cuts out 50% of the time, because they just literally, okay, we understand exactly what you're trying to do, without having to waste your time explaining it and then get down 2 months and think, it's not for us.
Nima, I want to ask, from your perspective, what does the Sussex Innovation Centre do for guys like these, or anyone?
We, as I said, help businesses get investor ready. So that's everything from interrogating their idea, checking the egos.
Right.
As you'll see, there's a great playoff between Ahmed and David, where, Ahmed has said he's the ideas person and David kind of has him in check.
So know who does what.
Exactly. Not everyone has a co-founder. We have a lot of solo founders, and it's difficult for them to have that playoff, have somebody else to speak to. So we prepare them in that stage, help them with the storytelling element, because the science bit is, we retain facts more through a story.
Right.
So if you can wrap what your business does in a story and tell somebody else, they're more likely to remember it. So we help you with that. We help you with the numbers, as actually I said, you need to know your numbers inside out.
Yeah.
You don't know what question you're going to get asked when you are pitching. And all the way through to making the introductions with investors.
That's so true, actually, about the storytelling. I think that's where we come alive, is that we've got lots of ideas, but what I seem to be good at is actually visualising those, because I've got a design background.
Right. So making it real.
Yeah, and also constantly cutting back to the simplest way of explaining the biggest, widest view.
Great. Do you know, I love that point. And I think to kind of wrap things up, it feels like what we've heard today is that if you're, as somebody looking for investment, you need to get your point clear. You need to understand who does what, whose talents are in the right places. You need to understand investments, get to know investors. You need to be prepared to repeat yourself over and over and over again. Get asked the tough questions, keep your ego at the door, which seems to be the point we keep making. But also not be too precious, but make sure that you just don't keep going. I'd like to hear from everyone, what are your kind of top tips for people out there who say you have absolutely no knowledge, you're doing this for the first time? What are your top tips to get them started and get them through the process? We'll start with you and go this way.
Really research the process of fundraising. Also connect with other founders and get a steer with them. On LinkedIn, you can find hundreds of them. And
to learn from their experience.
Yeah, and just chat to them and they can help guide you.
Perfect, thank you. Nima?
I'd build on that really and say take action, just keep on going. It's a numbers game, so don't give up.
Lovely, thank you.
Speak with as many investors as possible and get your numbers right.
Perfect.
Yeah, I think get yourself a business coach.
Right,
Yeah, I would, and especially somebody who can help you work over your pitch deck over and over again. There's plenty of people out there who've got the acumen, been through this process. But I know any of us, our doors are open to anybody, and so are yours. That's what you're there for. But we would, encourage anyone to get in touch with us and help make. you lose objectivity so quickly
Right.
with your endeavour at the coalface.
Yeah.
And that's where the storytelling becomes ever more complicated. The communication of the idea visually becomes more complicated. Whereas somebody else can see that straight off. And there'll be people out there who want to help you get through the process.
Perfect. Great. Thanks ever so much, everyone, for this conversation. That's the end of our conversation about people who've actually raised investment. Our advice to you is to just keep going and find out as much as you can.
There are 5 key factors that determine how investment ready your business is. Number 1, you have a clear vision. Your business needs to be more than an idea at this stage. It needs a clear focus in the market. Can you articulate or better demonstrate how your product or service solves a real problem in the market in a different way to what's already out there? Many innovative companies miss the chance to capture the attention of an investor because they are articulated in a complex way and fail to make a strong immediate impact. Number 2, you and your team. Do you have a robust, rounded team to meet the challenges that come with a startup? Is there chemistry in your team? Are you likable? This may sound like a high school drama. However, as Omid from Present pointed out, if you can convince an investor that you are the right person to bring this business to fruition, that is more than half the battle during a raise. Remember, it's unlikely you will have the breadth, depth of knowledge and experience needed to do everything in your business at this early stage. An option is to bring on board advisors that have specific experience in your space and are willing to help you to demonstrate you have considered potential gaps and obstacles. This also adds credibility to your business as an investment opportunity. Number 3, business model. This is essentially your revenue strategy. You will need to show how your business will sell its product or service to customers to generate revenue. The type of model you select is dependent on your product or service offering, your pricing strategy, and the audience you are targeting. Demonstrate that you have researched and understood how these elements come together. If, for instance, you are a SaaS business, it may make sense to adopt a subscription-based model as your customers will need your service month on month. However, if you are selling sneakers, it's unlikely your customer will need a new pair of sneakers every month, so a sales-based model may be a better choice. Investors will want to understand exactly how your model works, so keep it simple with a clear breakdown of price, cost, revenue. Number 4, market opportunity. Is the market you're playing in big enough and growing? The saying goes that investors are typically looking for a 10x return. In reality, this may be lower depending on the type of investor you are pitching to. Whilst a VC may seek a valuation that suggests a 10x return, an angel may accept a 5 to 10x return with a clear exit plan. Either way, you do need to demonstrate that there is growth potential in your space. There is no investment opportunity in a high-priced product that serves a small niche. David from Present spent considerable time carrying out due diligence as part of the investment journey. So use available data to put this into perspective and consider if you can answer the following questions. What is your overall market size? What is the market size in your geography or industry? What is the market share that you are going after? And number 5, potential for exit. Many founders don't start their business with the end in mind, which is why this answer is often missing in a pitch deck or conversation. Talking about an exit suggests that you have considered a big picture view. You can see the potential and opportunities for your business through M&A or IPO, for instance. The second part to this is speaking to strategies that will be pursued to maximize your valuation and achieve these goals.
Hello, and welcome to my lovely guest of experts on funding for innovation. So I'd like to, first of all, get you to introduce yourselves.
Yes, I'm Krista McGilvery. I'm the founder of Mind Over Money, and I work with individuals to make them feel confident about finances.
Hi, I'm Nima Amin. I'm the Head of Ventures at Sussex Innovation and Sussex Investments.
Hi, I'm Pete Lane from Sussex Innovation, and my role really is working with disruptive innovation and funding and commercial routes forwards, and particularly around intellectual property coming out of universities.
Marvellous, thank you, Peter.
Hey, I'm Jess. I'm the founder of Crowdfund 360, and we help businesses, social enterprises and charities run successful crowdfunding campaigns.
Fantastic. Thanks ever so much. Lovely to meet you all. So I'm going to dive in with the first question. Why would somebody come to any of you as individuals or your organisations to get funding for innovation?
To us at Sussex Innovation, we work with early stage founders and scale up businesses. So because we do have very close links to the university, we are, I guess, a one-stop place where you can work end to end with us, from verifying your innovation through to receiving funding, or working with us to acquire funding for your idea.
And what cost does that have to the business that's trying to get funding?
I think because we have so many experts, and I know Pete can probably talk more to this in terms of Sussex Innovation or the business support we offer, you get so many different perspectives, so much access to our networks and all the other types of funding that we offer. Aside from introduction to investors, it's grant funding, access to academics. It's a whole variety of support that you receive.
And I think it is, the way that we work expands people's viewpoints. It allows us to challenge their perspectives of how they see their innovation, how they see their business moving forwards. So it's very much around challenge, support, expanding, the opportunities that we believe might actually be there, and giving them a viewpoint of how investors see their proposition. I think it's about widening the team.
Right.
It's about widening the skills, widening the viewpoints, not being afraid to have a controversial viewpoint as to their innovation or the personalities that were within there. Because I think we'd all agree, investment's a lot about the people, and I think we often see with scientific innovations and disruptive innovations, people focus very much on the technology,
Right.
And investors are very much looking for the team, the experience,
Because they'll be needing to work with them.
Yes,
Yeah.
absolutely.
Crystal.
Yeah, I think when people come to me, it's more about giving them the confidence and helping them to understand what's happening in their business. So
Okay.
if they are looking to seek funding, okay, do you know the numbers yourself? What is your business about? Really breaking that down. So in terms of, what's important, it's being confident about your business itself and the model.
Fantastic. Jess.
I think crowdfunding lends itself to innovation. Crowdfunding started because, well, it didn't start, but it started in the mainstream as things that couldn't get the traditional funding.
Right.
And so a lot of innovative businesses will come to us because they can't get the traditional funding, or just because their audiences expect it to be crowdfunded in some way because it is innovative. And then a lot of our clients will come to us because they want to do it first time and succeed, and they don't really know how to. And there are so many bits of crowdfunding that you have to think about. So it's kind of, how can we manage that project? They might be solo founders, so they might be doing everything themselves, or they might be small teams. But in general, the CEO is so busy doing all of the other things. They don't want to then have to think about this giant task as well.
That's interesting. So is there types of innovation that struggle to get funding, or that funding appreciates better?
Yeah, that's a really interesting question, and I think there are some where you get into science and things like that, because there's very much a translation that has to be done, a simplification. We see that a lot with university innovation that coming out of academics, in that there's almost an opposite value to the way that you sell or attract interest into something that's scientifically complicated, that has to be from the perspective of the problem that it solves.
Right.
And very much in the sort of point of view that investors need to translate that very quickly. They have sort of perhaps short attention spans to attract
Well, they're busy people with lots of money.
Absolutely.
Hopefully.
Yeah.
So, I would make the assumption that an investor would hear innovation and just think tech. Would you agree?
For the most part, I would agree with that. And I think disruptive innovation, people assume it's tech, and that's what many investors, VCs are looking for, something tech-based. I think other innovations that are radical innovation based in pharma, science, lends itself more to syndicated funding. And I'm sure Jess will talk to community-based type of businesses that probably lend better to crowdfunding. Overall, I'd say there's probably no specific thing that ties innovation to type of funding. It's probably more investor-based.
Right.
But we are seeing trends in the market that suggest otherwise.
are there different sorts of funding which can match better to different sorts of innovations?
I'd say so. I mean, Nima would probably have more knowledge about this than me, but I mean, there is a vast amount of different funding that's actually out there. Some of the things that we do when we spin companies out with intellectual property from the university is looking at, by creating that commercial vehicle, that also opens up other types of funding through organisations like Innovate UK that otherwise wouldn't be available to them.
Yeah.
And they're often like grant funding, which is something I guess that we haven't really touched on, that can help kind of cross further valleys of development for those kind of entrepreneurs and the teams that are going through those early stages before they're ready to look for other types of funding, through VCs or seed funding or whatever else. But it's a way of de-risking, if you like, which are often very complex, very risky investments.
Yeah. Would you agree with that?
Yeah, to the most extent. I think grant funding is incredibly difficult to access. I can't remember the stats, but a very low number of businesses actually manage to acquire any meaningful investment through that vehicle.
Yeah.
So people immediately jump to equity funding.
Right.
And I think we need to develop knowledge around the fact that equity funding isn't the only way.
Yeah.
Crowdfunding, I think, is an amazing way for many community-based businesses to raise funding. And a VC is not your ultimate goal. There's lots of questions in between about what's your business like? What do you actually want to do with the investment? What does your business need at this point?
Can it be fun?
Yeah.
Oh, yeah.
Give me some examples.
That first pledge that comes in from someone that you don't know, that is the best dopamine hit. And then they all start coming in, people that you don't know believing in you. That really builds your confidence and makes you feel like this is going to be something.
Yeah.
And that's when all the hard work for the last however many months starts to pay off.
Right.
And it's when you start getting calls from, The Guardian, the BBC, can you come on and talk about your innovation and your crowdfunding campaign, or you've raised this much money, can we do a piece about you? And I think there's some of it that makes you really feel like you've started to become a bit of a celebrity in that space.
Well, creating a brand is almost like creating a celebrity, isn't it? That people have a relationship with.
And I feel like, for my clients that crowdfund, that's when the fun starts to hit.
Great. Anything else that any of you feel that people who are out there who are either at the beginning of their investment journey or they've made some investment mistakes could do with hearing?
I think just a tip as well, go to pitching events, go and watch other people pitch.
Such a good idea, yeah.
And it's really interesting and fun. I think hearing about other people's businesses.
And that's risk-free, isn't it?
Yeah, you can just sit in the background or you can practice.
Yeah.
I think getting yourself into that space. If you want funding, go and be in it, be around it so you can speak in the right way and be familiar and comfortable. But yeah, I think go to those pitching events.
So my top tip would be clear about what it is that you're offering in your business. If you cannot explain it in a short, concise way, then it's not going to make sense to somebody else. Be open to advice, listen to advice, and take on that advice where it's applicable.
Fantastic. I really appreciate your time today, everyone. It feels like what we've learned, if you're going to get into funding for innovation, is you need to check your ego in at the door. You need to be open to meeting people. There is all sorts of funding opportunities out there, but be clear, do your homework, get yourself ready. Is that fair?
That's right.
Absolutely.
Fantastic. Thanks so much, everyone.
According to sources at Crunchbase and PitchBook, venture funding is at an all-time high. However, funding and finance are aspects that many founders continue to find challenging, as you have heard from Omid and David at present. Even if the closest you've got to venture funding is watching Dragon's Den, you can still jump into venture, angel, and crowdfunding by actioning the 4 practical tips shared by the round table of financial experts. 1. Leave your ego at the door. 2. Be open to opportunities. 3. Educate yourself on the investor environment. And 4. Put yourself out there. The Sussex Innovation Finance Funding Canvas is designed to challenge your perspective, your purpose, and place into context the advice and experiences shared by the round table of experts and founders. Every aspiring entrepreneur will have stumbled on Start With Why by Simon Sinek, which explores why some ideas work and bring success and others fail. The Mum Test by Robert Fitzpatrick takes this a step further with a practical approach of doing your due diligence, crafting the right questions, researching the market, and understanding the trends and needs. David and Ahmed from Present walked me through how they put this into practice and how they developed, researched, and validated their business from a post-it note into an investable business. The Sussex Innovation Canvas presents some of the key questions that you need to ask yourself before trying to execute a raise. Let's start with a very basic. What does your business do? You must be able to explain even the most complex idea in a simplified way. Both Present and Percept Imagery did this in two very different ways. Akshay from Percept Imagery built a prototype for prospective investors to understand his complex futuristic solution, while David and Ahmed from Present used their own platform to send a gift to an investor that had previously turned them down. This ultimately led to a light bulb moment for the investor. This leads us to how opportunities and networks play a role in this journey. A top tip Crystal from Humanizing Finance shared with me is to adopt a growth mindset, to push your boundaries and put yourself in spaces where you can connect, because your network will become your most powerful tool. Also echoed by Jess from Crowdfund 360, she urges every founder to find their tribe. This will help to find the right investment vehicle for you. A financial plan helps entrepreneurs to drill down and focus on what it will take to build and launch your innovation into the market. You may find as you step through your plan that you have grossly underestimated costs, and in fact, everything takes more time and money. In fact, running out of money is the second biggest reason businesses fail. This is why it's imperative to create a plan and a strategy that allows you to forecast over the course of 3 to 5 years and to truly understand what your business needs at every milestone to bring bigger success.
Thanks for watching. We hope that you've enjoyed this journey throughout the series and are taking away lots of new insights and inspiration for your business. We'd love to hear from you. Please let us have your comments and feedback and tell us more about the innovations you're working on. At Sussex Innovation, we are committed to helping you realize your ambitions. If you'd like to develop your plans further with our team or to connect with our academic colleagues here at the University of Sussex, please get in touch via social media or via our website. Make sure you continue to join the conversation with our business community by clicking on the Discuss button found on the Learning platform. And also keep an eye out for the final Q&A session where our experts will be online and ready to answer your questions about finance and funding.